Good afternoon, ladies and gentlemen. Welcome to the UPL Capital Market Day. Today, we have some of the board members present, as well as the entire global team of UPL senior management is present for this Capital Market Day. The agenda for the day is largely, we will take you through the numbers, followed by presentation by Ajit Premnath, who is a global CEO, followed by a couple of slides presented by Mr. Bhupen Dubey, who heads our seeds division. And then we'll have a presentation by Raj Tiwari, who is our CEO supply chain. Post the presentation, we will have the Q&A for about 45 minutes to an hour, followed by high tea. Most of the members of the board as well as the senior management team would be here to answer the questions. So in case if some questions get left out in the Q&A, you can join us for high tea and you can ask your questions then. With this, I'll start the presentation. The safe harbor statement I'm assuming as read, all of you all are aware of. This is a standard statement. I'll start with the financial highlights. The revenue growth is of 9%. This is on a constant exchange rate. If one has to remove the impact of exchange, then the growth is at 7%. EBITDA has improved by 47 basis points over that of the last year. PAT has improved by 17% over that of the last year. Return on capital employed for financial year 17-18 is 23.4%. The net working capital stands at 84 days, and cash generated from operation is rupees 2,843 crores. These are the key financial highlights. I'll take you through the detailed financials in the next slide. It's a bit busy slide, but we just maintain the standard format. Revenues for the year stood at 17,378 crores, a 7% growth over that of the previous year. Gross margins at 7,174 crores are 7% above that of the previous year. Gross margins as a percentage to sales is at 41.3%, an improvement of 30 basis points over that of the previous year. Overheads are at 3,658, a 6% growth of that of the previous year. And EBITDA at 3,516 crores is a 9% growth over that of the previous year. EBITDA as a percentage to sales stands at 20.2%, an improvement of 40 basis points over that of the previous year. I'll straight go to net profit for the period. Net profit for the period stands at 2,022 crores, a growth of 17% over that of the previous year. And as a percentage to sales, it's at 11.6%, almost 100 basis point improvement over that of the previous year. The sales waterfall chart is as follows. Revenues are at 17,117 crores, and the growth is about 10% in volumes. We had a negative impact of 1% on account of price, and a negative impact of 2% on account of exchange. As I mentioned earlier, on a constant exchange rate, the growth is 9%. Income by region, FY 2018 over that of 2017. We'll start from the extreme left with North America. North America revenues for FY 18 are at 3,083 crores, a 7% growth over that of the previous year, and they represent 18% of our overall revenues. Europe at 2,305 crores, has grown again by 7% over that of the previous year, and it represents 13% of the total revenues of the company. Latin America at 5,692 crores is a 5% growth over that of the previous year, and it represents 33% of our overall revenues. I'll go on the right to India and then come to the rest of the world. India at 3,189 crores has shown a growth of 8% over that of the previous year, and it represents 18% of our total revenues. Rest of the world at 3,109 crores has grown by 7% over that of the previous year and represents 18% of our total revenue. As you would observe, pretty much most of the regions have grown in the range of 5 to 7% during the last year. Just reflects the pretty balanced growth that we have had across various geographies. These are numbers for Q4. Gross revenues stood at 5,691 crores, a growth of 7% over that of the same quarter in the previous year. Gross margins at 2,171 represents a 4% growth over that of the previous year. Gross margins as a percentage to sales at 38.2% are about, I would say about roughly in the range of 70 pips below that of the previous year. Here is where I would like to highlight that basically we had increases in costs coming out of the raw material costs going up because of Chinese disruption, which Raj and Ajit will cover in their presentation. But this has impacted and we couldn't do a corresponding increase in our selling prices. EBITDA at 1,218 represents a 9% growth of that of the previous year. As a percentage to sales, EBITDA at 21.4 still improved for 30 basis points over that of the previous year. This goes to show that we have been able to manage our costs better when we saw that our margins were not improving purely because we could not pass the benefit, the increased cost impact because of the Chinese disruption. Profit after tax at 779 crores is a 7% growth over that of the previous year and 14% of that of the gross revenues. Net profit for the period at 736 crores is, one can say it's flat, it's minus 1%, it's almost flat. And it's 12.9% over that, 12.9% of the sales. The revenue waterfall chart is as follows. The revenues of the last quarter previous year was 5,270 crores, and they have gone up to 5,621 crores. Largely 8% coming out of volumes. There was no price, price contribution was 0, and exchange impact was -1. So on a constant currency, constant exchange rate, the growth was at 8%. The split of revenues for Q4 vis-a-vis across various regions is as follows. North America at 1,296 crores represents a 7% growth over that of the previous year. And North America represents 23% of our revenues for this quarter. Europe at 983 crores shows a growth of 7% of that of the previous year, and it represents 17% of our revenues. Latin America at 1,765 crores also grew by 7% over that of the previous year, and as a percentage of our total sales, it represents 31% of our total revenues. India at 460 crores grew by 6% over that of the previous year, same quarter, and represents 8% of our overall revenues for the quarter. Working capital analysis. The net working capital was at 84 days as compared to 91 days during the previous year. As you would see that largely the contribution has come by increasing the payable days from 125 to 137, a 12 days improvement. We had an inventory increase by about 3 days and receivables increased by about 2 days. So overall, we have been able to manage our net working capital and bring it lower than that of the previous year by about 6 days. This is how the cash is deployed during the year. Our EBITDA at 3,517 crores. Net of interest and taxes, we had a saving coming out of working capital of 75 crores. And FX impact and others was contributed, added further to by about 173 crores. And then we had investments of 293 crores. These are investments in our associate. CapEx was net CapEx for tangible assets stood at about 1099 crores. Intangibles was about 325 crores. Dividend outflow, these are dividends pertaining to previous year, which we paid out after the AGM approved, after they were approved at the annual general meeting. Of that was about 358 crores. Other investments were at about 423 crores. Tax receivables were in the range of 503 crores, and thereby resulting in our net debt going up by about 279 crores. Marginally increased by about 279 crores. With this, I would hand over to Ajit. Ajit will take us through the global business. He will share with you his insights on how the year went by.
Thank you, Anand, and good evening, everyone. I will take you through a few slides trying to explain the reasons behind the numbers that you see. I will talk about our regional performance, the factors that drove that performance. I will also touch upon industry a little bit, what's going on. And I will also then touch upon our strategic initiatives, which will be a follow-up on what I presented last time as to what progress we have made in terms of our strategy implementation. To start with, just a little bit of history over the last 3 years. As you can see, UPL has grown consistently despite the fact that the industry had 2 years of degrowth. And the latest figures that we have for the last year that is just over, 2017, is that the market was flat. So we can now see that the market probably is recovering from 2 years of negative, let's say, territory. But during the difficult period, UPL still continued to grow quite robustly. So over the 3-year period, if you see the growth, 10%, followed by 16%, and followed by 7% now. So we have been producing consistent results despite industry problems. Coming to the regions, I'll just highlight a few significant points or significant areas where we did well. Number one is that some of the key brands of UPL, like Iris or Shagun or Eros, Ulala, Atabron, really drove the growth last year. Most of these brands have either doubled in volume or even more than doubled in volume. And some of these brands are now the preferred choice of the farmers to control a weed or a pest or a disease. We expect these brands to continue to grow very robustly in the coming years, driving growth. The 2 fungicides that we launched last year, Avansar Glow and Cuprofix, have been received very well. The growth in the current year, which was the first full year, or let's say the year past, which was the first full year, has been excellent, in line with our expectations. And we expect these brands to become really mega brands going forward. We also introduced, last time we spoke about our initiatives in biologicals and nutritional products. Last year we launched 3 products, very well received by the market. It's concept selling. The volume development takes time, but the reception from the farmers has been excellent because they have seen really the benefit of the product. And we expect this product to get established in the coming years and contribute significantly to the business in India. Last year we also saw, although it was not the first year, but we saw many areas of cotton getting outbreak of cotton bollworm, which actually signifies very clearly the breakdown of BT cotton resistance to bollworms. UPL is very well poised to take advantage of this situation. We have good portfolio to tackle this product, and we see this as an opportunity going forward. As far as rainfall is concerned, last year was better than previous year for sure, but still there were areas, especially in the central and southern part of the country, which either did not receive rains on time or did not receive rains at all. So it was a mixed bag, but definitely it was a better year than the previous one. Coming to Latin America, we continue to grow in Latin America despite the region degrowing by 4%. So the region had a significant degrowth. We successfully launched a new insecticide in Brazil with the first year turnovers very significant, and we expect this product also to grow very fast in the coming years. Our multi-site solution, which is a multi-site fungicide, which you are all aware, for the control of soybean rust, we continue to grow. We increased the treated area by 15%, and today we treat about 35 million hectares with our product in Brazil. That's a very significant share of the business of the total planted area that we have. In most of the key markets of Latin America, including Brazil, the last year started with very high level of inventories. And this actually had several, let's say, implications. Number one, the fresh purchases got delayed a lot. People did not pick up material till the season was around the corner. And therefore, all the early purchases that normally happen did not happen. The second impact of that was that we could not, or the industry could not pass on cost increases into the market last year because there was too much inventory lying already, and that was a challenge. And on top of that, because of delayed rains, the planting season got delayed, and therefore the sales got even more delayed. So that impact was quite significant in Latin America. And markets like Argentina and some countries of South Cone like Uruguay were actually quite dry. The consumption there reduced a lot. Coming to North America, again in this territory we outperformed the industry. Industry grew by 3%, and as you can see we have a growth of 7%. Here our glyphosate resistant weed management program really drove the growth. All our herbicides that are positioned on this segment in soybean and corn and cotton were the growth drivers. Also a very good season on potato, where we participate with our fungicide, did very well. Cotton area also is significantly increased, and we have insecticide portfolio to go on cotton besides herbicides. That also was positive for us. The negatives was clearly the commodity prices, which continued to be depressed throughout the year, thereby sort of reducing the ability of the farmer to spend money on crop protection and crop inputs by and large. Europe generally is supposed to be a pretty slow growth or a flat market, very mature, but as you can see, UPL had a very decent growth for Europe. 7% growth is actually quite high. The market just grew by 2%, and that's how Europe is. 0 to 2% is the growth rates. And here again, our strong presence on sugar beet. Sugar beet crop is really on the upside in Europe. Area is increasing. The market opened with very low inventories. And we have a very nice portfolio of herbicides to address this market. And that was a big driver for the growth. We also launched several new products. And when I mentioned this 4 and 9 numbers, it's not 13 products. It's a combination of product and country, okay? So one product country, it could be 2 or 3 products, but in 5 countries. So that's the combination. But we are launching new products, okay? So that's good news because we have been investing very heavily, not only in defending our existing portfolio, but also bringing about new products to address farmers' needs. Business in Germany is significantly rebounded. We had the highest ever sales in Germany. Again, sugar beet is a big driver, but also other crops. Southern Italy for a second, I would say the second year was very, very dry. Second continuous year. Spain and Italy, extremely dry, very low disease pressure, and we are very strong in fungicides. So therefore, if it doesn't rain, it really impacts us. The rest of the world, actually, essentially Africa, Middle East, Asia, China, including Australia. So here, in the territories of Africa and Southeast Asia, we had a double-digit growth rate. So these are the areas where we are focusing now. We are resourcing it better, and the results are visible now. We are growing quite robustly in these areas. We launched a couple of herbicides, Satellite and Lifeline in Turkey. Very successful launch, and we expect these products to also become significant in the coming years. Several other countries also, we got registrations, several African countries, several countries in Southeast Asia, Indonesia, Philippines, and in these countries also, we launched new products. Our local business in China, which is the brand business, which is also our focus, also had a decent growth. The dampener last year was really Australia, very, very dry year. 16-17 was an excellent year for Australia, good rains, but last year was horrible. And that really affected our sales in the country. Just to give an idea, this is the product mix, not much change, quite a balanced portfolio. Our emphasis on herbicides is visible here, and that's in line with the industry actually. But what is important to note here is that the portfolio is very, very balanced, and that's the trend going forward we want to continue. So what are the macro, let's say, environment, global environment? So in 2018, we expect the GDP to grow by 3.9%, which is a good number. So therefore, the growth rates continue to be robust. And there is a very clear correlation between the GDP growth of the countries to the consumption of farm inputs in many countries, especially Latin America, US, and other European countries. The forecast for weather is normal, which is excellent because all the El Niños and La Niñas are not predicted, and normal weather is what we really need to start our season. So that's good news. It also, the stock of commodities, major commodities, seems to be coming down. That is getting reflected in price improvement. Over the last couple of months, you see some price improvement of key crops like soybean, like corn, and this is good for the growers. And when prices go up, their ability or their intention to spend really goes up. A lot of innovation is going on around resistance management, and that's where our strategy also lies, and I'll be talking about a little bit more. But resistance is becoming really an issue. It's not only weed resistance, it's also disease resistance, it's also insect resistance, yeah? So this is an area where UPL is focusing, and that's really spreading quite fast and becoming a serious issue. Some of the initiatives of the Government of India, as you might be hearing, is essentially we think that it's good for the industry. The idea is to encourage the industry to invest, depend less on China, and stand on its own feet. I think we believe it's a good at the end for the industry as well as for the farmers. We have seen last year, I just want to pause here for a minute. We have seen last year there was a huge disruption from China. Not only the prices went up, the cost went up, but there was no availability of raw material or intermediates or even the finished goods. And this affected the industry. This also affected us. And so we need to be a bit independent from China, and that's what I think the government is also encouraging. Investments in precision farming is going up. Even in India, I think people are talking a lot about it. The idea is here to be accurate in whatever you do, the right dose of fertilizers, the right fertilizer, the right amount of water to irrigate, not too much. So all these things are becoming more and more important as the resources become scarce. And I think this will be the trend going forward. And we are fully committed to participate in this journey. There is, of course, some political uncertainty over the tariff war between China and US. At the end of the day, we don't know what's going to happen, but we'll see. It could be also an opportunity for us in some sense. Overall, we believe that 2018 should be a positive year. The market has come out of negative territory, was flat last year. Hopefully, we'll see some growth in 2018. The other big thing that is happening is the consolidation of the industry now. All the three big mergers or acquisitions have been approved. So you will see three big giants getting created. So with a better integrated offering of seeds and chemicals, and this will be, of course, a strength for them, and they'll be able to attract customers more than before. However, in the medium term, we expect that they'll be too busy in integrating. It's quite a distracting activity. They are very big in size. And for the next couple of years, they'll be more focusing inwards than outwards, which could be an opportunity for us. Competition will intensify. That's pretty clear. The big companies will put a lot of pressure on the distribution channel in certain countries where you have very consolidated distribution to control them. And we can see that there could be some very, very tough competition in certain geographies. There are also many positives. For example, for these big companies, the molecules which are probably $50 or $100 million would be small. So they may not focus on them. They may divest them. So these are all opportunities for us. It's also possible that the post-patent players will also start a little bit consolidating to have a certain size to match this big force. And nothing has happened till now, but it's quite probable something of that sort can happen. There's a lot of realignment of product portfolio among the second-tier companies. This also will happen. For us, UPL, we see a large opportunity to gain distribution access in many markets where there is a very fragmented distribution. Because these kind of consolidations actually finally release some distributors from the big companies, and those guys are always available for companies like UPL who provide a lot of value. And we have seen this already happening in many markets, including India, including certain markets in Latin America, where, for example, if there is a Dow distributor and a DuPont distributor, one of the two survives, the other one does not. And by definition, they are good distributors, and that's an opportunity for companies like UPL. However, we think that companies which have a diversified portfolio and they operate in many markets and many crops will have a better chance to not only survive but grow. And we think that we are in that position where we are highly geographically diversified. We work on many crops, and our portfolio, as you saw, is also very diversified. So that's a strength for UPL. So what is our approach? So our focus, as I presented last year, that our focus is really launching innovative products. And I'll explain innovative products a little later again. These are some of the products that we have launched last year. Tripzin, Sperto, Triziman. So we continue to innovate and introduce products which are new in the market, innovative in the market. And we will continue to maintain geographical product and crop diversity. That's the base, that's the core that we will follow. The other area which is very important, at least for some of the markets, is a go-to-market strategy which is very differentiated, not follow everybody and do the same thing. And example is US, where the distribution is very consolidated, and probably these 4 companies, the 4 big guys, will have a lot of power on the distributors. In such a market, we have taken a different path, and we have discovered, or let's say, found an alternate distribution path for us, which the experiment has been very successful. We'll pursue that, and we think that we'll be able to manage our growth in such markets going forward. We have also, you saw the CapEx numbers, we have also invested a significant amount of funds in our manufacturing capacities on both manufacturing new products as well as securing our existing products. So both are important for us, and becoming independent from China is basically our objective. We also last time talked about adjacent technologies. I'll speak again a little bit more about where we are today, but biologicals and nutrition continues to be important. Zeba, a new technology, is now really, we are making inroads, getting a lot of attention in several markets. We're working very hard to demonstrate the performance of the product and the usefulness of the product. And our farmer engagement activity, which we also presented to you last time, our spraying services, our advisory services, our Unimarts, we will continue to grow in India. So a little bit about innovation. Now, the key to our innovation is to understand the needs of the farmer, of the customer, who is the farmer. I think that's the focus. And not only today's needs, but we have to anticipate the need of the farmer 5 years from now, 6 years from now. Because the time it takes to register a product, if you are looking at what he wants today, by the time you register the product, his needs would have shifted because of various reasons, including technology. So we have to not only look at his needs, but his needs 6 years from now. And that is what we are trying to do. And on the right-hand side, you will see that we have traditionally very strong manufacturing and R&D base. Yeah? And we also have a very strong regulatory skills and capabilities. What we are doing now to understand really the customer better is investing in our field development activity. And this activity is really important to understand the needs of the farmer, find some solutions and test them in the field. So it's important to test the products in a real field situation. And that capability of building across the globe, not only in India, we have our own farms in India, but we have them we have greenhouses now in Europe, we have a farm in Brazil, we also have investment in US. So we are investing in this activity a lot in multi-locations. We are also very significantly investing in our IP capability, because as we move into this journey of doing new things, we have to also protect the investment. And IP becomes really, really important. And we have embarked on that journey. We have strengthened our team, and that becomes a big cog in the whole machine of innovation. And of course, when you talk about where to play, obviously we need to know the customer better, the markets better, the crops better, and the segments better. We have also invested to build a proprietary business intelligence platform, which will give us all the information on the trends in the marketplace, collecting information from various sources, and giving us actionable, information on what's happening in the marketplace. This is a proprietary platform that we are building. We are significantly investing in this because we need to know what's happening in the marketplace to really innovate, and that's the basic stuff, right? We are also going to invest in our launch excellence. We recognize the fact that We don't have too much time to bring a product to peak sales. Competition catches up very fast. So we need to be very good in launching new products to reach peak sales in 2 years' time or 3 years' time at the max. So that's our focus. These are some photographs of our field station. That's in India, near Pune. This is in Brazil. This is greenhouse, and there's also outside a big field station. This is in France. So we are really investing in this activity a lot. Just to give you a few examples of what it means, what innovation really means. This you know a little bit, our UNICEF Glory journey in Brazil. But there's a bigger story after that. We have now a full range of products to support the new chemistries to survive for a longer time and to provide that multi-site activity which helps break resistance, disease resistance in soybean. So now you will see that we have not only UNICEF Gold, but you have many other products, and we give a full spray program starting with Tridium or UNICEF Glory and Triziman, and these are all new products that we are launching. They are all value-added products. They are mixtures, and therefore now from one product, we have moved to a full crop solution. Similarly, this is the resistant weed management program that we have in, for example, in the US, where there's a huge problem of resistance of weeds to glyphosate, and you will see that it's not just 1 or 2 products. We have a large portfolio, and we give alternatives to the farmer. So if your crop is not, let's say, tolerant to GF, it's not a GM crop which is tolerant to glufosinate, we have other solutions. Yeah. So we have solution 1 where we have 3 products, we have solution 2, we have 5 products. So there is a lot of choice we are giving to the farmer to manage his field, manage his weed control program. And that is actually driving the growth that we have in the US. The third example, and this is a photograph which shows a treated field. On the left-hand side, you see a field which is full of weeds. You can't see the crop actually. On the right-hand side is the crop, and you see the patch in between, which is absolutely clean. Yeah, and this is UPL's weed management program implemented in this field. This is another example of our insect management portfolio. When Intacta was launched 5 or 6 years back, we understood that there'll be a shift in the pest complex from caterpillars to sucking pests and bugs. We started developing a product in 2011, which we launched last year. And actually, today that's the situation. The products that were used for managing caterpillars, they have declined significantly in the marketplace, whereas the products that are now being used are for control of bugs and sucking pests, and that market is growing every year. And we have a fantastic solution that we launched last year. So this is actually an example of looking forward 5, 6, 7 years and anticipating the impact of technology in the farm. We also have last year started a collaborative program with Bayer. I think we mentioned it last year. In Brazil, it has been very successful, although it started a bit late, somewhere around September, which is not the ideal time. It has been very, very successful. This just shows what it was. It was essentially saying that anybody who bought Fox, which is a Bayer product, and UNICEF Gold would earn points. At the end of the season, those points will be converted into discounts. This is for the farmers' incentives. This is for the farmers, and a lot of Bayer distributors and retailers participated in this program, and a significant volume went through this channel. And this year, it will be a full year of implementation, and we expect this channel to grow our business also. We are also talking to other partners. There are other companies which are interested in partnering. We are in discussions, so I can't mention beyond that, but when we have some agreements, we'll of course let you know. So this is a good development. This is just an example of the joint promotion that we did in Brazil. This is a joint promotion between Fox and UNICEF Gold. You can see there was a nice logo created and a message, and there were a lot of other activities which were done. This is just an example. Our innovation rate, and you're aware of this, every year we present this slide, and our target is to have an innovation rate of at least 15%. Last year we had an innovation rate of 19%. There are some of the products that you see which we launched last year. So you can see that this journey we will continue and create more and more brands as we go forward. In 2018, launches in FY 2018, that's the last year, there were several launches. You can see there were 29 herbicides, 27 fungicide, 24 insecticide. The seed treatment also, we are launching products, adjacent technology, including Zeba and biologicals. So we had a lot of launches and across the regions. You see, it's not just not 1 or 2 regions that we are launching products. This is an example of launch we did in India of 2 biological growth enhancers or health to give to plant health products. And so these products have been received extremely well, and we hope that we will be able to make big brands out of these products. You can see the crop that you get when you use the products. A bit of update on Zeba. Zeba is a journey which has been slow because it's a concept. It's the first time concept that we are promoting of conserving water. Yeah, and every consumer, every customer wants to see how does it work, and therefore our emphasis in the first years have been really to demonstrate the performance of the product to as many farmers as possible. So we have moved past the proof of concept. We are very sure that the product performs. We have hundreds and thousands of demonstrations to prove that and data to have that. We have that confidence, and we are now working very strongly with the farmers to demonstrate the product. We also commercialized the product in India last year, and you see that several crops we have farmers who have used the product in Kharif, cotton, groundnut, sugarcane, tomato, in Rabi, potato, onion, garlic, cumin. There's almost all the crops you can see. There's many crops that the product can really perform, including orchards. Agriculture universities and ICR institutes have also validated, so we have got institutional validation of the product, which is also very important because it's a new technology. And also outside India, there's a lot of work going on. We have registrations in several countries. We have already commercialized the product in Brazil, which potentially can be very big. We have started working on sugarcane last year, and the performance has been excellent, and this is a big opportunity. It's a high water consuming crop. And we have also started global, sort of collaboration with food processors, because these food processors, they contract contract growing of crops, which they use for processing, and they also provide inputs to the farmers. So in their input kit, we will include Zeba. So that's excellent progress. Just an example, pictorial example, you can see the difference very clearly. A crop which is doesn't have Zeba and there's not enough moisture, you can see the growth, and on the left hand side, and you see the results below. You have done trials across the world. You see all the regions, and the amount of increase in yields is as high as 8 tons per hectare in, where is that, India? Probably India, yeah, is unimaginable. It's fantastic. I mean, this kind of yield increases you don't see normally. This is example for sugarcane, an increase of 9 metric tons per acre. Again, a very significant increase. You can see the plants, how healthy they look with Zeba. This is another benefit of Zeba. Normally, when the soil compacts, the seed germination becomes difficult. It becomes uneven. So it also helps in, sort of reducing the compaction of soil. So the soil is then sort of easy to break through, and that also helps in yield of the crop. And you can see these results from Turkey, very significant increase in the yield. So these are some of the benefits. Then there are benefits on fertilizer use. There's a benefit on leaching of fertilizers. So all these kind of benefits we are trying to demonstrate to the growers now across the globe. I will now invite Mr. Bhupen Dubey, who is heading our Advanta business, to talk about seeds. Bhupet.
Thank you, Ajit. Good evening. From agrochemical, go back to seed, the basic. Last time when we discussed about, it was a progress on the amalgamation and how it impacted the overall business of the company. This year, I'm very pleased to share with you the forward momentum in seed. Seed industry background, all of you are well versed with, by and large going through quite tough patch. Is directly linked with the commodity prices. And commodity prices, though there is some strength we see in like last couple of months, but entire year was very, very tough. Farming, especially in industrial world, is going through a lot of stress. With this background, look at Advanta portfolio and geography. I'll take you through where we are. Very happy to report on North America. After 3 years of a bad patch in sorghum primarily, we found some traction. And we, especially in Mexico, so green sorghum part, there was a small recovery there. In US, price erosion continues, led by low commodity prices and also led by intense competition among temperate corn companies. Post-amalgamation, the merger of these companies is impacting heavily. All the companies are trying to stuff the channel, and farmers are very choosy about because their cost, the profitability per hectare is eroding. Of late, we started getting good inquiries about sorghum because the sorghum business in US and Mexico is directly linked to China import. It was going up quite well, and last couple of weeks, the trade war signals are coming in that categorically they are mentioning sorghum. So there is a point of worry of late. It may have an impact going forward, but that is a latest situation. Coming to Latin America, we were carrying sunflower seeds. There's a good traction in Argentina. And we are out of inventory. We lost some of the business because of not enough stock available. But on the other side, a lot of inventory which was in the channel is gone. And we are beginning new business with a good traction there. Shortage in the field corn and the grain sorghum seeds impacted some business there. Because of the farm productivity under pressure in Latin America, they are also using a lot of their own seeds rather than going to the market. They are going for farm saved seed there. A year before, we had a good business in Venezuela. This year also, orders are good, but unfortunately not backed by the enough foreign exchange. Dollar availability is a constraint, and therefore we saw a risk, and therefore we decided not to really cater aggressively that part of it. Coming back to Europe, Europe primarily our focus is our core crop, which is sunflower. We refocus our strategy. Our strategy earlier was addressed towards Western Europe. We realized that globally, sunflower is getting concentrated in Black Sea countries around Ukraine, Romania, Russia. Sunflower used to be an important crop in some of the geographies in Africa, India, Latin America. Area is shrinking because the productivity of Black Sea countries is very high, and they're very, very competitive. We have a very good germplasm in sunflower. It's about 60 years old collection. We decided to upgrade our germplasm to incorporate two important traits for Eastern Europe, primarily disease package and Orobanki control package. And we just opened the R&D station there last year, put our breeders there, and initial crossings are taking place. It's a long-term project, maybe 5 to 8 years' time, but our investment is going in those areas in Europe. And we are very hopeful about our future success in those areas. Very basic hybrid we launched one last year in Romania, and we are just monitoring the success. Hyson 202CL failed in these markets because now the industry is not ready to give the premium for this high value added crops, and therefore profitability is under question there. Coming to South Asia, we gain our market share in field corn. Overall market is down. But our products coming out of our Thailand breeding program, which is about 40 years old, are very robust, and the position is very, very strong. We could maintain, we could grow our market share in these countries. Vegetable seeds, especially global trend of the vegetable seed, I think about after a gap about 12 years, It was growing everywhere, most of the places, and the year gone by declined significantly. I mean, industry figures are between 15 to 20%. Some of the company have dipped about 30%. So that has undergone a severe stress last year. From India, we increased our sales export to Sri Lanka, Bangladesh, and Pakistan. We grew nearly 28%, and we believe that there is a good scope, and our portfolio is evolving in these countries. Coming to ASEAN region, we grew very well in Thailand, Cambodia, Myanmar, and Philippines. Field corn acreages are down in Vietnam. Farmers left many hectareages fallow because return on crop was very insignificant. Industry launched GMO product in Vietnam. They priced at $9 a kg, as against normal corn about $5 a kg. But farmer did not see any value, and therefore all the company who supplied this GMO crop, they had to reduce and sell it at par with a normal crop. So there is a situation in Vietnam. Coming to Australia, after a gap of a couple of bad years, last year we had a very good year. Canola crop came back, especially hybrid canola. Last 2 years trend was towards OP. This year we found solid demand for hybrid canola, and we registered a growth of about 18% on last year's, which was not a great year for us. Sorghum market is bouncing back again. China demand will impact positively Australia current year also. We are very hopeful about it. But that replaced some of the corn area there. And as Ajit indicated in his presentation, Australia is witnessing a drought. That means negative for corn, but very positive for sorghum. And Advanta, as you are aware, is very strong in sorghum germplasm in many countries where sorghum is important crop. In terms of growth driver, look at it, fully leverage first-class tropical corn, which we have. Pressure is in temperate corn, but we are very strong in tropical corn. Our growth journey continues there. We opened R&D station in Bihar last year to cater to some of the market which we were not catering so far. Expand strong tropical vegetable seed, another growth driver which we have. Current vegetable focus is around India and surrounding country. We identified about 22 countries around the world, including Central America, where we believe that our genetics, which can fit in there. Our product development trials are going on. We are deploying some agronomists there who are generating data, figuring out the fitment and advancement program. And we are parallelly building our talent, which will also spread, and then go and expand these genetics. So there is another growth platform we are building in for ourselves. Third important platform which we are building is innovation in grain as well as forest sorghum. Sorghum is a crop in a cereal where the hybridization is lowest. Geographically, let's say you take a market like Mexico, America, India, there the 90 to 95% hybridization is there. But huge area under sorghum in Africa, 22 million hectare, which is still OP. We believe that we have a tremendous opportunity there to start with a low-end hybrid going towards a high-end, high-value-add hybrid. So that is the area our R&D resources are being focused. As I indicated earlier, expand sunflower portfolio to Eastern Europe is a long-term investment plan which we have, but we believe that that platform which will give us a very good return on our investment in these areas. So these are a salient highlight on our portfolio, geography-wise, as well as some of the thoughts on our growth drivers of future. That's it. Thank you very much.
Thank you, Bhupen, and good evening to all. I'll take you through a few slides for manufacturing and supply chain. Yeah, so these are some of the levers which we used last year for manufacturing and some of the levers for procurement. Raw material consumption optimization, that's a continuous improvement on our consumption efficiencies to better the cost. Of course, we have also worked very hard on effluent recycling and also
specific reduction of effluent, be it wastewater or incinerable waste reduction, or it is solid wastes. We have also worked on the lever for productivity improvement by skilling as well as by squeezing our current asset to deliver more. We have also adopted newer technologies to be able to achieve better productivities. This is the next point is regarding the optimization of fuel mix. So it's always when your oil prices goes down, we switch between oil and of course on coal. Specifically worked also on energy saving initiatives on our manufacturing platform. On the procurement side, these are the levers which we have used to add value. Global spend optimization or consolidation. So basically consolidating various regional spends and extracting more value out of it while we go for negotiations. Competitive benchmarking. We adopt clean sheet costing before going for the final negotiations. Make versus buy is always a lever where we continuously evaluate between our own manufacturing vis-a-vis buying it from outside. Share of business, because for the same thing we have same molecule or same intermediate, we have got couple of suppliers, and share of business between the supplier and geographical mix, we are able to extract more value. Auction and FRX request for quotation and value engineering. Of course, this is added significantly towards our saving our allowing our margin expansion to happen. Ajit also talked about China. Last year was a very difficult year as far as sourcing was concerned. One is of course the pricing, the other is was on the availability of the product itself. 7 rounds of inspection happened in China, and that led to many industrial park getting closed. It was not about one factory, but many parks getting closed for months together. Environmental production tax, which has recently got levied, and what Chinese government has done is that they have empowered the regional governments to levy these tax depending upon how much environmental problem has been there in the various states. That could range between 1.5 yuan to 10 yuan per unit of discharge. Then therefore adding significantly to their costs. Anti-dumping duty on MPBAD on some of the intermediates, MPBAD, phenol, and then there was the rebate program has been curtailed down from 13% to 11%. Chinese government has also decided not to have any allow any growth in the intermediate and especially on the pesticide manufacturing. What has happened is that the government has been very particular about those factories which are not automated and they were completely manual. The government has gone ahead and shut those plants unless you do the complete automation and also continuous reaction. They have gone ahead and closed the plant. Yuan has appreciated significantly. Capacity restriction on commodities, especially on coal and the power sector, coal and the steel sector. This I have already covered in terms of the pesticide regulation. All this added significantly to the Chinese manufacturer cost, which drove the cost of intermediates and raw materials significantly in China last year. In the financial year 2018, we as an organization have invested 50% of our capex has gone into new products and new plants, basically to drive our top line growth. 9% of them has gone into looking at the China, situation. We have to secure our supplies. We have invested 9% of our capital into for securing our RM and intermediates. 4% we invested into our sustainability program. 12% we invested into cost reduction initiatives to drive our margins better. 4% into maintenance. Maintenance means replacement of equipments. 10% in infrastructure in our various plants, and 10% in our other companies like Advent and other initiatives. This definitely implies that we have been trying to be independent from some of the shocks which we got last year, and of course EHS has been our topmost priority for manufacturing excellence. And these investments are not only in India, but they are geographically spread. We are doing expansions in Colombia, US, France, and Vietnam as well. On sustainability, our CO2 emissions are down by 5%, water consumption down by 2%, but overall last 2 years, if you see, we have been able to reduce 22% our fresh water consumption. Wastewater generation is down by 15%, solid waste generation is down by 20%. Not only we become more sustainable and this thing, but this also makes us more competitive. Sustainability and safety has always been, top of our agenda. These are, some of the awards. Last year, we, our various plants have won across the globe. Right from Green Manufacturing Challenge Award to Safety Award, FICCI Safety Award, which is a very prestigious, again, award, OSHA, Water Digest Award. National Award for Manufacturing Competitiveness, IGMC Gold Awards. This is the Frost & Sullivan Gold Certificate of Merit Award, which we won in the Mega Industries category last year. I have a small AV which I would like to present for all of you on our manufacturing excellence journey, which for the last year. Can I request you to please play and dim the lights, please?
Different people have different wishes and different ways to pursue them. Sometimes through a messenger, sometimes by locking themselves up and throwing away the keys. Take a look at the wish trees in Ireland. They have more wishes than they have leaves. Wishes of hundreds of people. We had a wish too, to achieve manufacturing excellence. But our journey to the wish had many small steps of initiative, resolve, and innovation. Today, we have an in-house power plant that keeps us energy independent and helps us reduce our costs significantly. We use energy to the fullest by adopting the newest methods for recycling and reusing it. We combine many reactors and turn them into continuous flow reactors to maximize efficiency and to ensure greater consistency of our processes. We brought down the breakdown time close to zero with the help of a fully active condition monitoring team and path-breaking technologies that can predict and fix even the minutest errors. We invest our time in extensive research on ways to better our products and processes to enhance profitability. Our wish drove us all the way to being awarded for manufacturing competitiveness. Rome has many marvels. Ever seen the Trevi Fountain in Rome getting filled with coins? They are not just coins, they are wishes. We wished for what those coins symbolize: prosperity. We pursued it by pulling off complex projects, accomplishing them in less than a year, and getting it right the first time, each time. We use computer-simulated solutions to seamlessly build our projects and to ensure timely delivery. We use pre-engineered solutions to quicken project delivery. We have engineering and technological capabilities in-house to handle high-tech systems that deliver efficiency and ensure consistency in quality. These measures made sure we grow bigger and better each year. When a woman in India ties a Rakhi thread around her brother's hand, she wishes to be protected by him. Much like us, who wish to protect our employees. We adopted business excellence tools like 5S and Pokayoke mistake proofing from the Japanese to make sure it's impossible to commit a mistake in the plant, right from the lock system to the log system. We are on the fast track towards digitizing the entire manufacturing process and enabling everyone to keep track of each of its activities. We reduced leakages to a surprisingly minimal level by introducing stringent processes and practices. We give our employees rigorous training and awareness and test their fitness frequently and whenever it's necessary with training centers and awareness classes. Thanks to the wish, it makes us the workplace that keeps winning awards for safety. Take a look at the wishing steps of the Blarney Castle, where people walk backwards up the stairs with their eyes closed to get whatever they wish for. We wished to keep the world green forever, and we made careful steps towards making this possible. We prevented the industrial waste from reaching the environment by investing significantly on new innovations like MBBR, OH Radical, and RO. We turned effluents into usable water and waste into value-added co-products. We also ensured that we far exceed the expectations of the regulatory norms and environmental guidelines. Today, our team of expert engineers has already turned 4 of our factories into zero discharge units that let out absolutely no effluents to the environment. We reduced our water usage by 22% by recycling and reusing water to proceed faster towards conserving the environment. These are the steps that led us to recognition from all across the world. Thankfully, all our wishes are fulfilled, but our journey towards excellence continues, delivering value through manufacturing excellence. UPL, Farmer First.
With this, all our presentations are over. I would like to thank Ajit, Bhupen, and Raj for a very informative presentation. I would like to thank each one of you all for patiently listening to us. And now we will have the Q&A session. I would like to invite Mr. Jayesh Rauf, our Global CEO, Mr. Ajit Premnath, Mr. Raj Tiwari, Mr. Carlos Pellicer. Carlos Pellicer is our CEO for Innovation, and strategy, and he's going to be also answering a few of the questions on strategy and other related matters. And I would like to invite Bhupen Dubey, who will be answering the seats question. With this, we open the forum for floor for Q&A.
No questions. I think we can all go and have snacks. I think we can just generally chat. I think it's been a very challenging year. Lots of, with the degrowth in the global markets, I think there's a lot of inventory. We've had some issues as far as price increases in the last quarter. I think we've seen some cost increases, and we had some tough time trying to pass those costs through. That situation has changed a lot, and we believe that today we will be able to, in this coming year, I think that issue should be behind us. And even with the oil price increases, I think price improvement, we should be able to pass some of the prices to the market, cost increases to the market. Somebody passing the mics?
Hi, my name is Ashutosh from Quantum Advisors. So
Speak into the mic. Yeah. It's on, but
yeah. Is this fine? Yeah, my name is Ashutosh from Quantum Advisors. I have a fairly simple question. So you have been growing faster than the industry for the past 3 years. So what is it that you are doing differently than others? Or is it that you have the cost advantage where your products are competitive as compared to others, and farmers are down trading globally?
I think of course as you saw here, one of our core competencies is a strong manufacturing platform. We've continuously been investing in that. I think this coming year you'll see a bigger delta. I believe there will be a bigger delta, because until last year, there was a situation where there was a lot of inventory, old cost goods, and people who were sitting on inventory who had planned for growth in the market did not achieve. So all that was getting offloaded in the last year. I think the market situation has improved. Commodity prices have improved. I think the availability of inventory in the market is also reasonably much lesser than it was same time last year. I think for the amount of effort we do, and the amount of investments and dedication we have to our cost and manufacturing and innovation, I think we didn't grow enough last year. So if you ask me, it was a good year relative to others, but in a normal year we should do much better than our performance this year.
Thank you.
Sir, Ramesh Mojwani from Mehta & Vakil. First and foremost, your presentation
Can't hear you.
First and foremost, your presentation was all-encompassing. It touched all the various aspects.
Who's speaking? Okay.
It touched all the various aspects of your businesses. So there were two important focuses. One was on China, and other one was developing newer markets. In China, you have made two emphatical emphasis. One, manufacturing in China has become expensive for the intermediates. Two, procurement of raw materials for your products from China has become little prohibitive in view of the stringent manufacturing norms which the Chinese government has adopted. How are you looking at this situation and turning it to your advantage?
So as I was saying earlier, I think, this situation of chemical industry in China has gone through quite a lot of, the government's quite focused on increasing the standard, and they've put a lot of pressure on the industry. So many industries, not only AgChem, I think all pharmaceutical and many other companies have, not only in India, I think in US and Europe, everywhere, they are a big chemical supplier. So that disruption is impacting everybody across the world. And so I think this is nothing new for us. We are probably the most backward integrated in terms of manufacturing of agriculture chemicals, and I think that this next few years should help us in our ability to manage our profitability and our growth because of that.
And add capacities to substitute the supplies from China to the rest of the world?
I mean, we have not so much manufacturing in China, but we produce in India. So all the investments we are making is basically to that. I mean, it is an issue. It's not the end of the world. It is one disruption which is happening today.
And your initiatives for developing business in several countries, how are you seeing going forward with a good monsoon forecast?
India is about 20% of our business, so we always plan for. I think our new product launches, which we've done in the last 2-3 years, are getting mature. Yeah. Launching new products in a depressed market is always more difficult. We think if it's a good year, we should see a much better growth. But of course, time will tell. We are just in the beginning.
Thank you and all the best.
Yeah, hi. Just two quick questions. One on a clarification on a slide number 25. While Mr. Ajit was making a presentation, he made a statement that peak revenue will be achieved in next 2 to 3 years. You are referring to the company as a whole or in some specific country or a segment?
Okay. No, what I was trying to say is, I was talking about launch excellence. And in that context, I said that when you're launching a new product, there are followers in the market very quickly. So you need to reach your peak sales of a new product quickly. You don't have time to go slow and grow the product over 5, 6, 7 years. You don't have that time. So you need to prepare for the launch, prepare to introduce the product in the market well in advance, so that you bring your peak sales closer. Could be 2 years, 3 years, 4 years, whatever it is. But the point I was making is, if you are good at launching products, well prepared to launch new products, and that too when they are differentiated products, they are not me-toos, so you're not copying somebody, you're doing something new, and take that product to peak sales very quickly. So in that context, I made that comment.
So sir, can Zeba be one of such example of an opportunity which we are talking about? Because this is completely a different segment.
Zeba is something which, it's a product which is very, sustainability in agriculture is a big issue in the world today. And I mean, big topic. And it really reduces the impact of climate change. It reduces the groundwater contamination with fertilizer. It reduces the runoff. Also, it reduces basically the water consumption. These are topics which are going to be discussed. Now maybe you discuss it 2-3 times in a year. In 3 years from now, you'll discuss it once a month. And I think 7-8 years from now, you'll discuss it once a week. So we are very focused as a company on bringing innovation which will take our company into the future. And this is one of the projects which we have. There will be other projects which are also going to make help agriculture more sustainable. But sustainable technology has to be a cost advantage to the user. So you cannot bring technology where a farmer has to go bankrupt to, introduce that technology. So our focus is really to bring affordable technology. Typically we have seen that it gives you anywhere from 8x to 12x benefit to the farmer. Suppose he invests 1 rupee, he gets about 8 to 10 rupees. I think all of you are in the stock market, so I think you'll understand that. He really gets a big advantage. So we have a whole portfolio of technologies which we are working on. And over the next 7-8 years, we will bring in all these technologies which are focused on making agriculture more sustainable and reducing the environmental impact of agriculture and reducing the impact of climate change on agriculture.
Sir, if I allow to ask a last question. In last year, we saw two big disruption in a business. One, a China factor, and second is in terms of the higher inventory at the beginning of the season. And also, there was a consolidation of the large player globally. So if I want to see next 2 or 3 years, how do you see these 2 or 3 factors affecting the business environment for UPL in specific and industry in general? I'm talking very specific to US market, both Latin and North America, and also European market. If you can throw some light on that.
So I think the mergers are just completed. They may have been announced long ago, but they just got freedom to operate now. So I think the impact of the mergers will really come in the next, starting June, July, Corteva was formed now. So I think the impact will be in the next 2-3 years by the time they consolidate, they get their organizations together and this thing. And the other half of the question was, I think when the market is declining, all organizations end up with a little higher inventory. We've been very fortunate that most of our products were sold out. So we do not have too much inventory. I mean, we probably lost about 3 to 4% of top line because we ran out of product. So we are expanding. And I think the last 3 years have been commodity prices were declining in the last year, particularly were very low. Farmers do down trade. I don't know if we are really in the category of down trading. We are somewhere in the middle. So maybe we get some benefit, but I don't think once they test our quality, they up trade anymore. So I think we are able to retain, and that's why, I mean, somebody said last 3 years we've been growing. Actually, we've more or less been one of the fastest growing company for the last 10 years. And so I'm assuming we don't lose many of our customers. I can't say all, but we are able to retain our customers because they see our quality and value in our business.
Good evening. This is Abhijit from IIFL. Thanks for taking my questions. Normally at the fourth quarter meet, you provide your outlook for the upcoming year. So would you like to comment about your outlook for growth and margins going forward?
Our revenue outlook guidance is 10 to 12% growth over that of the previous year. On EBITDA, we are talking about 12 to 15% growth over that of the previous year. And in terms of working capital, it would be 90 to 100 days. And on CapEx, we will be spending close to about 1,500 crores this year also.
Just a couple of clarifications on that. Normally, you've been providing somewhere around 12 to 15% kind of volume growth guidance. So, there's a slight moderation compared to that. So does that sort of indicate a still challenging situation in Brazil in terms of channel inventories or, Mancozeb, inventories? Or?
No, I think as far as, I think there is, we are just coming out of a very difficult year. I think we need to be realistic. If the markets improve dramatically, we can do better. But I think for a matter of caution, I think this is what is a sensible number to take. I am pretty optimistic about the business, though.
But specifically with regard to Latin America, has the inventory situation normalized by now? How are you seeing things going forward?
I'd say, when I talk about inventory, as the different geographies, different regions have suffered different aspects. As Jay explained, our inventories have been much lower than any other in the market. And we believe that the momentum that is starting the year now, April have been a quite interesting month. The price of soybean go up. The price of cotton is quite good. Price of corn is better. The trending to price increase is there. The costs that have increased last year, the inventory have been moved very down. And now we believe that there are very important momentum to recover prices because no way, I say the costs have increased, the price you move. And the number of new products that we are introducing the last years and the products that we have to introduce in this year, in the following years, is amazing. As Ajit was explaining, we are putting a lot of focus in new launches, excellence, because the number of new products that is coming, and this is a very important point to life cycle management of the products. So there's a lot of excitement about the following years because of the new product development and the capacity that is there to support. It's a combination of factors that give these perspectives.
And just to add what Carlos just mentioned, even in a difficult year, our business of Unisep Gold, Mancozeb, in Latin America, especially Brazil, continue to grow. We increased the penetration, market penetration. We treated 4.8 million hectares, which is a very large number, 15% growth over the previous. So we continue to grow in our existing platforms. And on top, we started introducing new products, including the insecticide you saw that I mentioned that we launched in Brazil. So our journey or growth journey continues.
The 1,500 crore capex you gave, that includes the intangible investment, is it? And any color you could provide in terms of which products you're adding capacities in?
We generally don't give product-wise details on capacities. So, but there is certain key molecules where we want to expand and we have registration in some of the markets. We would be investing for those assets.
One last thing, just on Advanta, if you could give us what the revenues are for the year and what the growth was on a year-over-year basis. Thank you.
Advanta top line was, top line growth was in single digit lower side of it, vis-a-vis the field crop of industry is about flat or minus. So that is on the seed side growth.
So thank you for the opportunity, sir. My name is Kunal Mehta, and yeah, I'm from Valem Capital. I just had a few questions. Firstly, we are observing that as the years go by, the key asset in this business is becoming the expertise to register products rather than the manufacturing. Of course, manufacturing remains the important aspect. So if you can just give us some guidance as to how you are proceeding with the registration process, especially in the United States. What is your strategy in the US and the Latin markets for the next 3 years, and how are we going to grow with that aspect?
So if I heard the question right, you are asking on the registration
Yeah, strategy.
Strategy. So, registration is a core strength for us. We have built over years the capability to register products globally. And our strategy to register products is to be quick and to be efficient and to be the right first time, which means that we need to create dossiers which are acceptable in the first instance. We get less questions and therefore the process runs fast. And our strategy is very clear. All our innovative products, new products, we register globally in all the key markets or all the relevant markets. So that's our strategy. Last year, we got more than 300 registrations globally, and we continue to sustain these kind of numbers every year.
Yeah, just a follow up on that. So because in the US, the Midwest still remains the most important market. So in the Midwest, I wanted to understand how are we trying to approach, because you just mentioned in the presentation also that you have devised a different route of making an entry into the market considering the tough distribution hold.
So I think, we have been working on a portfolio of products for the Midwest region. These are large farmers, and you cannot just go with one product. So today we have, as you saw from Ajit's presentation, a whole portfolio of resistance management technologies which we are bringing. We've been able to bring products like Interline and our other portfolio of products which have helped us, which are really making impact because they're helping the farmers bring some different ideas to weed management. And we have really increased our presence dramatically, and Vincent is here during the break. Vincent, you can just you can have a chat with him, but we've been very successful, to say the least. Our growth in the US has come from the Midwest region this year. And we believe that in a lot of our products we were sold out, so we could have had actually a higher growth, even in a very, very tough market. So I think if the year is better, we can hope to do better.
Okay. Just one more question on my side. If we look at the market for the next 5 years, the opportunity lies in the number of molecules which are going to go off patent as compared to the previous 5 years. But there is also a challenge that all of these consolidated innovators are now also going to target, may look at targeting these molecules also, because cost of developing new ones is getting increasingly difficult. So as a competitive scenario, how do you look at things going forward? So will it get more difficult to get a good pie of the new molecules going off patent, or
I'll let Carlos answer that, but generally if you see, you saw a number, our innovation rate is quite high. But Carlos can talk about it a little bit more. I think you've seen the performance of the company. We don't normally lose market share anywhere once we get in, so I don't see that as a challenge.
I'd say the case of patent, there are many products coming off a patent in the next 5 years. That is an important case, and we are looking at, and we are tracking that, and we are working on that. But more important than that, it's we have a huge platform of molecules. As a company, we have a platform of insecticide, fungicide, herbicides, and all the new adjacent technology that we are working in, biologicals and nutrition. It's we look for the platform of products. Doesn't mean that the innovation will come in the off-patent product that is coming soon. The innovation could come from old products, because we work looking to the different dimensions, the different possibilities that we can work. See, it's the off-patent is one important ingredient on that, but the most important ingredient is the way that we work to innovate our offers, our solutions, Say we are very much focalized in the customer needs, not necessarily in terms of the product that will come off patent, but in the way that we can bring a solution to the customer. Say it's a different perspective in the way to design innovation.
Yeah, thank you.
Hello. Hi, good evening, everyone. On the innovation turnover index, you mentioned it at 19%. So just thinking, so in the past years, it has been around 10 to 14%. So with an acceleration in ITI, the growth rate at 7%. So just a thought, is it like the non-innovated portfolio is not growing, or you're seeing pricing pressure there? Just to understand that part.
So, you want to?
I'd say the rate of growth that we have delivered compared to the market is really disproportional. But I'd say the amount of innovation, the new products that will come in the next years, and what we have launched in the 2018 closing year, it's very disproportional from the market too. Say I believe the main point there of the like say instead to grow 15% to grow 7%, 8% comes from the point of the commodity price that have been more tough in the last year. Say when you have this commodity price depression, have a direct correlation in the innovation rate of the customers and the use of technology of the customers. Says the correlation potential is much more connect with that, but our life cycle management on the innovation side, it's very much in track, and we have a lot of good products to come in the following years. We are quite excited.
Specifically on Mancozeb or Unizeb, but that's still part of your innovation turnover, right? Just to confirm.
Sorry?
Yes, Unizeb Gold is still part of the innovation, but we have a life cycle management, a strong life cycle management on that. You saw in the slide that Ajit presents. Say we have many products coming in the protected market. And you have a very strong strategy behind that. It's instead to be one product, it's a multiple solution, and the value capture per hectare will be much higher when we see the complete solution that we are bringing to the market. Say we got Triziman last year, we got Tridium this year, we have Unizeb Glory, we have Unizeb Gold. I'd say it's a quite important life cycle management, and the technology is keeping growing.
And on that again, so I believe there are competitors who have entered that segment, particularly on the fungicide, Asian rust side. So how do you see competition panning out for you on that segment over the next year or 2 years?
I'd say it's normal when you invent. I say we invent a segment, we invent this platform, and this platform is normally when you create a segment, competitors come, and that is good because when you have a competition, you can be more innovative even, and the competition helps to make the segment even bigger, and the segment is growing. And we are excited to play and to work in that arena because it's that we understand that we have a very strong know-how on that, and we believe that our growth on that segment will be kept. As Ajit mentioned, we grew 15% this year in penetration in the segment. What is amazing, it's about 5 million hectares that have been added on that. Say, we create the segment and we are improving the segment, and we are happy that others are copying us. It's a good sign of that we are ahead in the development. It's a validation that our technology is really relevant, differentiated, and our competitors that at the beginning they was not believing, they are refusing to talk about, they are copying us now. It's quite motivated.
And just lastly on
Just to add, while the competitors are busy copying us, we move ahead, you know. So when you look at the life cycle management, we have these Trizimans and Tridiums and the other products, Glory. These are value-added products. So we move from a straight lower value product and move the market to the higher value product and start capturing that. So we are always ahead of the game. That's the whole idea. And then to secure our core, I talked about collaboration with the big guys. That's another strategy to secure the base. We secure the base and we move the market to more high value products where we operate. So that's how you have to keep on moving, yeah?
And any update on the specialty chemicals division you had created last year?
Sorry. Yeah. No, I think that area is very exciting. Part of our investment will go into that. You have seen all the chemical industry stocks improve. I think we believe that that is a big opportunity, and we are continuing to. We are growing in that segment. I think we had a decent growth, and we are going to invest some of our capex in that this year also.
Thank you.
This is Vishnu from Spark Capital. I have a few questions. Firstly, on pricing, obviously you have mentioned the reasons for China and the excess inventory. When do we see pricing come back? Is it likely in the next 3 months, 6 months? Do we do it along in tandem with the majors, or UPL can push it on its own, the prices?
So I think we've struggled in the last quarter to get the price increases through. But we are finding it a lot easier now. The situation is changing dramatically, particularly also the oil prices are going up. That does impact all the chemical industry. So we think price increase will come through now. We've seen it across on some products, and some products will follow.
On the capex intensity, we are now doing about 1,500 odd crores. Looks like at least the factories and physical investment is about 1,000 crores. Is the intensity likely to continue for the next 2-3 years, or will we see a decline in at least in physical investments to at least taper off fast forward 2 years later?
I think right now I think that investing for our revenues are a little less than 3 billion. Investing 200 million or so is we need to continue to invest in growth. We've always believed that the trading business and outsourcing business, which a lot of our colleagues, our competitors, and some of the people in our industry have followed that model. It was great when cheap manufacturing was available in China. Today, I think they will have to rethink their strategy. So I think a lot of the companies will have to have some kind of ability to manufacture themselves. Coming to our question, I think that investing 200 million a year is something which will continue. I don't see over the next 3 months investing less than that. Next 3 years investing less than that.
One of your slides you had mentioned about second-tier companies realigning their portfolios and distribution also kind of opening up. In terms of our inorganic activities, if you could just run us through of how we have seen assets, I mean, in terms of strategically trying to get into any new assets, the pricing, or any just your thoughts on this.
Didn't understand.
Second tier inorganic consolidation.
Yeah, I think, there's been a lot of M&A in the last year. I think the second phase of M&As will start some point, I don't know when, but it will start. So I think shedding portfolio, improving portfolio, etc. will start. I think some companies will be disrupted because of the supply chain problems they have. So I think there will be opportunities there. We don't know exactly, but obviously there's lots of rumors and discussions go on, and that's a continuous process.
Just the final question, you did mention that the growth is going to be about 10 to 12%. Any geography we expect to be faster than the company average? And what would that be? Would it continue to be Latin America at the top, or if you could just give some clarity on that?
Yeah, I mean, one of the things which we pride about is our diversity of revenues coming from different geographies. So that's something which helps us to deliver the sustainable growth and even give guidances in the range of 10 to 12%. Within these, of course, clearly LATAM and India are amongst our faster growing geographies, but not to say we have a fair amount of product launches in the US as well as in Europe, and those geographies are also growing well. So I would say it would be a balance, but certainly more bias in terms of growth, higher growth coming out of LATAM and India. We'll take last two questions, and then please join us for coffee, tea and snacks, but we'll take last two questions. So,
hi, this is Aditya from Investec. Hello. Yeah, this is Aditya from Investec. This is with regard to our, a product which, Bayer tie-up in Brazil. So, any timeline for this specific tie-up with Fox? And in case Bayer launches a product like Fox X Pro, what essentially the impact you foresee on our existing alliance on Mancozeb and Fox?
What is the future of this Fox alliance?
Fox X Pro. What happens to this alliance?
The launch of See, we add a lot of value to the Fox in the new launch. They still need protectant in their portfolio. So our relationship with them is quite close, quite good, and we believe that we will continue even for that. And the progress with that, it's moving quite good. Rogério, our CEO in Brazil, will be here during the tea break, and he can talk with you about that too. But it's moving quite good at that. Rogério Rogério is our CEO in Brazil and can answer that question too. But it's progressing quite good, and we will be standard for that too.
But Carlos, any timeline that you have that alliance for, say 1 year, 2 year?
A company that size doesn't do 1 year. This is a multi-year program. We also have other projects with them, global projects. So they will not come for 1 or 2 years. I don't see that. It's much more longer term. This technology of protectants is something which all the research organizations and researchers in Brazil are saying is the key for the future of disease management. So I don't see that as a short term. It's going to be longer term. And last year, one of our competitors ran a campaign totally against this technology. and because it was eating into their market. This year they are also a very large company. They also joined the whole campaign and added this product in their portfolio as a tank mix. Exactly the same thing, because they thought now they're going to lose the battle if they don't join us. It's as Carlos was saying, it's an amazing validation for the technology. And in a very bad year, I just want to emphasize, where protectants are products which the farmer use as a preventive. Preventive is mostly used when they are making a lot of money, they are protecting their yield. We had a 15% growth in a year when the farmers were making probably no money, or the least money they've made in the last 10 years on soybean. So even then we had a 15% growth. I see this as not a choice for the farmers. This is something which they really see as a value addition for and a tool they need to use. And I think over the next few years, we will see a lot more acres being treated with our concept.
So finally, this Mancozeb being a generic...
Can't hear you.
Yeah, so Mancozeb being a generic molecule, so, Ajit mentioned that there are few more companies that, UPL is talking in Brazil to enter into a similar kind of alliance. So what stop other companies to develop a product which is similar to this generic molecule Mancozeb?
Most of our business has been, just a general answer, most of our businesses have been generic since we were born, since 50 years. And we've still been the fastest growing company in the industry. So it's not that easy to displace. Once we get a customer, I don't think you can worry about, we don't worry about competition. I don't think that's really a problem for us. We really don't see that as a problem. We are the masters of that game. Let's bring it on. We know how to deal with them.
Yeah, so finally, so what could be the proportion of Midwest sales in US and how it has changed over the last 2 to 3 years?
I think from almost zero, I don't know, Vincent, how much percentage of our sale must go to from the Midwest?
Our sales in the Midwest in the last, in 2014, I'd say was close to 15% of our total sales. Now represents close to 50%. So this is the growth that's coming from Midwest.
Okay. Yeah, thank you.
Hello. Sir, what is your take on pesticide bill? If there is any price control actions taken by government, as we are exposed to largely generic, so how we are going to tackle these issues? So this is yet to be, this bill is pending quite a long time.
There was some talk, but it's died down. It's very difficult to, I think for, it's, price control in agrochemicals is very, very difficult to monitor and implement. So, of course, we were cooperating with the government to do that. We believe we are the lowest cost manufacturer in most of the businesses which we do, because of our competence in manufacturing. So, if they want to do it, it's fine. We don't believe that will be a disadvantage for us. And I think from UPL side, we actually had many meetings with the government to implement this, and if they wanted to implement this. And we are still willing to cooperate, but I think they've slowed down on that discussion. But having the capability of really indigenizing technology, improving manufacturing, ability to execute projects very, very quickly, and really having the ability to reduce cost of manufacture, where we are able to export products around the world and competing with the major companies. I don't want to say, sound pompous, but I think these sort of things will only help us.
So, but if you see seeds as a segment, in that segment actually
You're
there is
talking
a
about
price
seeds or
control.
chemicals? No, he started with chemicals. Now you want to, Bhupen can answer this.
Yeah, I think the government concern regarding the farm income is real, and we share that concern definitely. And also our Prime Minister promised 4 years ago that by 2022, farmer income per acre will be doubled. I think very important objective because otherwise disparity among the sectors, service, manufacturing, farming, is increasing. So in a wider goal of the country, we share that goal with the Prime Minister of our country, and in that we are going to play a big role. But there are various ways of achieving, right? One is focusing too much on the price control, like a control mindset. Another way is how do we really increase the productivity and profitability per acre? And there are a lot of areas in India, let's say, one of the highest arable land to the total land ratio in the world is in India. And many hectareages are available. The productivity is much lower than the global averages. We have the tools of the trade, introducing a hybrid, single cross, double cross kind of stuff. And we are collaborating with the government that you can explore there wherever you find that you have the mechanism to implement. But we have another options also, and we can partner and try to achieve that goal. So those dialogues are engaged. We being a significant player in agriculture sector from Advanta UPL in India, we are partner in the dialogue in various think tank. We are engaging in submitting a lot of position papers, ideas, etc., and working together.
Thank you, sir.
But as Jay indicated, even if that comes, we are fine with it because operating cost of our business model is very frugal by and large, and therefore very competitive. You know, that comes in some of the states because agriculture is a state subject by and large, and some state can take that call under various pressures. We are ready for that situation.
That's all, sir. Thank you.
With this, we'll end the Q&A session. Ladies and gentlemen, please join us for high tea and some snacks, and we'll be happy to answer further questions. Thank you very much for joining us for today's Capital Market Day.